Hello everyone. In this video, I will explain how to obtain additional shares of Coca Cola stock by trading the Coca Cola to Apple pair of stocks. So, by trading based on the price ratio of Coca Cola to Apple, we will obtain additional shares of Coca Cola. And what does it mean, the price ratio of Coca Cola to Apple? It means the price of one share of Coca Cola stock divided by the price of one share of Apple stock. To find this asset, we would click on the simple search, and we would type the ticker symbol for Coca-Cola divided by the ticker symbol for Apple, which is AAPL, and we would just click enter and it would come up, and it came up right here. We would use the one day time interval, and the indicator that we would use is the AI Trend Navigator. We would type it, the name of it, AI Trend Navigator by Zyman. We would click it and it would come up here. And what we see here, so we see this, the red and green lines. That's the AI Trend Navigator. So the green line represents an upward trend, and the red line represents a downward trend. And the numbers you see here on the right, this is not the price of the stock. This is the price ratio of Coca-Cola divided by Apple, the price ratio of Coca-Cola to Apple. And so let's begin. I will explain how to obtain the additional shares of Coca-Cola stock by trading the Coca-Cola to Apple pair of stocks. So over a period of roughly 6 months, a person can increase his shares of Coca-Cola stock by 28% by trading the price ratio of Coca-Cola to Apple. So I have annotated this chart here, and I will explain in detail how to trade these pair of stocks to get additional shares of the Coca-Cola stock. So we'll begin from the date December 22nd, 2023. So on this date, the price ratio of Coca-Cola to Apple was 0.301. How did we obtain that? Well, we obtained it by dividing the price of Coca-Cola, which was $58.32, divided by the price of Apple, which was $193.60, which yielded a 0.301. And on that date, we would buy one share of Coca-Cola priced at $58.32 per share. And we use the closed position prices. What that means is that the prices that you see here, the $58.32 for Coca-Cola and the $193.60 for Apple, those prices reflect the prices during the closing time of the stock exchange on December 22nd, 2023. So that's that. So one second. We fast forward to the date April 4th, 2024. The price ratio of Coca-Cola to Apple on this date has increased. It increased to 0.353. How we obtained this? We obtained it by dividing the price of Coca-Cola, which was $60.09, divided by the price of Apple, which was $170.29, which yielded 0.353. So the price ratio has increased from the previous transaction, which was on December 22nd, 2023. Because on December 22nd, 2023, if you take a look at it, the price ratio was 0.301. So, and here on April 4th, 2024, the price ratio is 0.353. So one thing to note here is that, which I forgot to mention, is that when we're trading, when we're trading the price ratio of pairs of stocks, and and we choose the and when it's the lower price stock divided by the higher price stock, and which in this case it is Coca Cola is a lower price stock and Apple is the higher price stock. So when we're trading the lower price stock to the higher price stock, and when the price ratio of the lower price stock to higher price stock increases, we would switch to the higher price stock. And when the lower price stock to higher price stock price ratio decreases, we would switch to the lower price stock. So in this case here, the price ratio of Coca-Cola to Apple, of the lower price stock to the higher price stock, has increased, and so we would switch to Apple, which is the higher price stock. So we would sell our 1.02 shares of Coca-Cola at a price of $60.09 per share, and from that transaction we would obtain $61.29, and we would use that $61.29 to buy 0.3599 shares of Apple stock. And the prices that you see here are the prices that occurred during the open position, meaning that these were the prices of Apple and Coca-Cola when the stock exchange opened, on April 4th, 2024. And this is the New York Stock Exchange. We fast forward to April 17, 2024, and we see that the price ratio of Coca-Cola to Apple on that date was 0.343. So now the price ratio decreased. And how we obtained the price ratio? We divided the price of Coca-Cola, which was $58.28, divided by the price of Apple, which was $169.61, which yielded the price ratio of 0.343. So the price ratio decreased from the previous transaction. And so when the price ratio of the low price stock to the higher price stock decreases, we switch to the lower price stock. So here we would sell our 0.3599 shares of Apple stock, and from that transaction we obtain $61.04, and we use that $61.04 to buy 1.047 shares of Coca-Cola stock. How do we obtain 1.04 shares of Coca-Cola stock? Well, it's the $61.04 that we obtained from selling the 0.3599 shares of Apple stock, and we use that money to buy the Coca-Cola stock at a price of $58.28 per share. So we were able to obtain more shares of Coca-Cola stock during this transaction, and the open position prices were used for this transaction. Now we fast forward. To May 2nd, and on May 2nd, 2024, the price ratio of Coca-Cola to Apple was $62.18. The price ratio of Coca-Cola to Apple was 0.36, and we obtained that by dividing the price of Coca-Cola, which was $62.18, divided by the price of Apple stock, which was $172.51, which yielded the price ratio of 0.36. So the price ratio increased from the previous transaction, and when the price ratio of the lower price stock to the higher price stock increases, we would switch to the higher price stock by selling the lower stock, price stock, and using the money from that transaction to buy the higher price stock. So as you recall, from the previous transaction we obtained 1.04 shares of Coca-Cola. So now we would sell those 1.047 shares of Coca-Cola priced at $62.18 per share, and from that transaction we would obtain $65.10, and we would use that $65.10 to buy Coca-Cola. To buy Apple stock. So we would buy 0.377 shares of Apple stock, and the open position prices were used for this transaction. Now we fast forward to our last transaction here. And so the price ratio here on June 13, 2024, it was 0.293. So the price ratio of Coca Cola to Apple was 0.293 on this date. And how we obtained this, we obtained it by dividing the price of Coca Cola, which was $62.86, divided by 200 by the price of Apple stock, which was $214.74, and which yielded the price ratio of Coca Cola to Apple to be 0.293. And so we see that the price ratio decreased from the previous transaction. And so we would sell the 0.377 shares of Apple that we had obtained from the previous transaction. And we would sell it and we would obtain $80.96 from that transaction. And using that $80.96, we would buy 1.288 shares of Coca Cola stock. And the open position prices were used for this transaction. So the prices of these stocks that you see here, those are the price of stocks when the New York Stock Exchange opened on June 13, 2024. So as you can see here, over a period of nearly 6 months, we were able to obtain an additional 28% shares of of Coca-Cola stock. So if you look at the first transaction, we initially bought 1 share of Coca-Cola stock. But then fast forward to 6 months after trading based on the price ratio of Coca-Cola to Apple, we obtained 1.288 shares of Coca-Cola stock. And we obtained this 0.288 shares of additional Coca-Cola stock without adding any more money, without spending any additional money. This was purely from trading the Coca-Cola to Apple pair of stocks based on the fluctuations of their price ratio. So this was my illustration of how to obtain shares of Coca-Cola stock over a period of nearly 6 months by trading the price ratio, by trading Coca-Cola to Apple pair of stocks based on the price ratio movements, and by using the AI Trend Navigator to predict when the price ratio goes up and the price ratio goes down. Thank you for watching my video, and don't forget to like and subscribe to my don't forget to like my video and subscribe to my YouTube channel.